Well, hello and welcome to a brand new show of Tracking Trends with me, Nikunj Dalmia. On the show, in which we'll help you identify the next vibrant bull market. Where is value in this market? Where there is euphoria in the market? How markets are likely to move in Jan 2024, considering that November was good, December was even better. Will the party in mid and small cap stock continues? Is it time to filter the noise, or is it time now to exercise caution? If luck made money in 2023, will it be luck again, or will it be skill? Much more, all that and much more on this edition of Tracking Trends with me, Nikunj Dalmia. But first, let's summarize as we speak what is the market setup. Choppy trade in the market. Monday was almost like a slow day. Tuesday is turning out to be a dull day. Broader market, broader indices, minor gains you would say here and there. IT and auto, dispatch numbers have not been that strong. It's correcting, and pharma is firmly in the green. So what are we discussing today? Well, we are saying that markets are betting that January 2024 will be strong. Why? Because money will come from global investors. It will come from China. It will come out of developed markets. Now that interest rates have peaked out. Now that the Fed has indicated rates would come down, will the party of 2023 continue to 2024? Are we looking at a sizable turn in terms of flows coming back? What about the January seasonality? Now, what happens in January, I think, is very evident. I look at the market purely based on historical data when I look at the short-term market movement. And if history is anything to go by, well, guess what, guys? January has not been a gratifying month for bulls. Always we start the year on high note that FIs will come back. We always start the high note that India will stand out in terms of flows coming back into China. And that is what I think market tends to discount ahead of itself. Whether it is in November or December, if one looks at the data, 7 out of 10 times large cap stocks have given a negative return. 6 out of 10 times small cap stocks have given a negative return. And that data in mid cap stocks is not different. What has been the January seasonality? Average return in last 10 years, flat to negative. Positive return, 1 out of 5 times. And even if you got the market right, those 3 times when in last 10 years markets have gone higher, the return has been abysmal 0.5%. So January is almost like a dull week. You start a new year, but markets normally react post-budget. In last 10 years, by the way, also includes budget and also includes the fact that there was a pre-budget rally element, especially in 2021. So what should one be doing in terms of a market approach? I've already told you the data. Let's now invite Kunal and let's understand the January seasonality. So Kunal, we'll put the data again. Data again in terms of what the January seasonality is. First, let's look at the trend indicator.
Correct.
This is how markets have moved.
Yes, this is from 2007-8, last 15 years.
This is only Jan, right?
Only Jan. These lines are only the month of Jan.
Okay. Now, the highest data, highest return, we've got 0.5%.
Correct.
And the worst is actually negative 0.5%.
Correct.
So January is like a thanda mahina.
Correct.
Not here, not there.
Correct.
This includes budget also.
Yes.
This includes pre-budget also. And from last couple of years, ever since the new government, ever since the Modi government has taken over, budget happens in Jan.
Correct.
So despite the fact that this is a year where FIs are supposed to come back, there is budget at play, markets have given no return.
Yeah, so you can say maybe FIs are taking a bit of a long vacation then rather than ending it on Christmas or New Year. But the data is very intriguing over here, Nikunj, because so I've looked at the last 15 years of data on the Jan.
How much time it took you to take it out?
This is quite a lot.
Quite a lot. 15 years you've gone back.
15 years I've gone back. And the interesting bit is, so we look at Jan. So Jan of course has a seasonality effect, but what matters is what happens post that Jan series, which is important because are those trend changing months which dampen the trend for the next 6 months, 1 year. I think so the data is quite interesting. 2008 was one such month. So as we can see over here, this was the time when Jan 2008 we topped out. It had an effect for the next 9 to 10 months consecutively. 2011 Jan, similar month, had an effect for the next 9 to 10 months for the index, which means a gap of less than 3 years. We formed 2 consecutive tops and both of them were trend changing for 9 months. We come back to 2020. Same, Jan month was negative. We saw what happened post-COVID. 2022, Jan month, again, one of the more decisive trends. we saw the index dropping by at least a 10 to 15% margin. Now, luckily, good part is that these bunches, they happen in a short span of time. The next bunch happens after a gap of 8 years.
So you are of the view that January will be a flat month?
So January will be a flat month, and it may not be a decisive trend for the rest of the year. Okay. That's what the data is indicating right now.
Okay, let's look at a blank page and we'll summarize it. We'll summarize our today's market action. The producer will actually flip it over. I'm just going to borrow the pen here. Let's write our observations. 7. We'll start the pen, I think. Okay.
Yep.
7 out of 10 times, markets are
Nifty
down
turns negative. Yeah.
in the month of January. 2024. What is your view? Up or down?
So it should be negative.
Okay. That's Jan. And then?
But then it should not have an effect for the rest of the year. Okay. Which means that January effect, which is considered to be a very critical effect across the globe, not just for our markets, should not play a role this time around for this year.
Okay. So let's erase everything and let's write some points. Okay, let's go back to the blank graph. Now I just want to tell our viewers that what is at play in terms of the Jan assumptions. Number 1, FIs flows. We don't know whether, that's my challenge, Kunal. Everybody is assuming that our fair the friends will come back. Something will change in the world that they will come back. And there is no guarantee for it.
Correct.
Second, technicals. Which is 7 out of 10 time markets are down.
Yes.
And third, I would say earnings. And this is where I think markets have run up and earnings are yet to catch up. Could January be a case of a drift on the lower side, more of consolidation, and maybe buy the rumor and sell the news? Kunal is of the view that January could be a flat month, but still 25,000 before election.
Yes.
Okay, so Kunal is not changing his big picture view. So don't try and preempt the market just because November and December were good, January would be equally good. These are the assumptions markets are building in.
Correct.
But if history and valuations are anything to go by and flows are anything to go by, looks like we could be in a flat month. And flat month is a victory for the bulls. That means the excesses in the market actually will get checked.
Exactly.
So we want a flat Jan.
We want a flat Jan.
We don't want a big Jan.
Yes.
If a big Jan happens, it's a bubble.
Exactly.
If a flat Jan happens, that means markets and excesses are over.
You have to consolidate because if you're getting ready for the next breakout, it's a very good time for the industries to consolidate.
Great point. So you want a flat Jan that should not be disturbing in nature. Kunal, thank you very much. Give me a high five. Thank you very much. So that's Kunal's view on where Jan could move. It could be flat with a downward bias, and it could really be a nick here or nick there for small and mid cap stocks. But here's Ravi Dharmishi, and let's play an excerpt of what my conversation with Ravi was, where he spoke about how to approach small cap, mid cap, and especially PSU stocks.
All the known triggers for the current year are kind of getting factored into the pricing. So fundamentally, it is becoming more and more difficult to justify deploying more capital. However, again, these things tend to last longer than what, I wouldn't be so brave to take a contra call that this is where it ends and this is how markets are going to correct, and I will use that opportunity, that correction, to deploy more money. The smarter thing to do is just stay invested, clear up your portfolio, get rid of companies with corporate governance issues. First of all, I don't like to segment the market in terms of who's the promoter. Of course, Government of India is a big promoter of a lot of businesses. Longer term, I don't think we should be, the interests are aligned of the government and the minority shareholders. But there are sectors where there is virtual monopoly, right? For example, defense. There are not too many companies that manufacture aircraft or helicopter or radars or those kind of things. There are only those few players. So there is a runway available to them. The private sector, by the time they come, it will be at least 5 years, if not 10 years from now. So there is a runway available for them. Clearly, those companies will do well. So instead of focusing on PSU versus non-PSU, I would say which are the businesses that excite me and which are the businesses that I want to own. Now, then I will see whether who owns that business and whether my interests and their interests are aligned or no. And in PSU, again, one more thing that we look for is there a right to win? Most of the PSUs don't have any right to win. What they need is a general bullishness in the economy for the stocks to do well, which is what they have been doing. The day there is going to be some kind of a dip in the economy or any kind of a challenge, that is where these companies will suddenly, the men and the boys will get separated. And I honestly feel it was only for example, in the banking space, it was only a reversion to mean trade. They continue to remain Me Too players. There is no special, there could be one odd PSU bank that has the right to win because of the depth and the penetration that they have. But in general, and it is a stated intent of the government that eventually there will be only 5 or 6 PSU banks left in this country. So you definitely want to be very selective and picky about which are the companies that you associate with.
Time to start our Q&A segment where we help viewers identify answers to their investments, and Sanjiv Bhasin joins us now. Bhasin sahab, first query, Shanta Pashumati, 200 shares of Nalco at 93 rupees. What is your sense?
Well, congratulations. You had the conviction to stay put. 3 things working for Nalco. One is the iron ore part. Second is the bauxite, which is another produce of that. And both these things are adding up to extreme good value. All the 3 things, they had an 8,000 capex, which is now going to see realizations from 1st of January. So I think 200 rupees on this stock could be easily on the card. So stay invested. It is a very good investment you've done. And today it is hitting new highs for the 52 week. I think 180 to 200 is very much on the cards on Nalco.
The thing with Nalco is that it's a great and a very efficient cost producer of aluminum, and they have access to bauxite mines, and these mines are captive in nature. And given the environmental clearances, availability of new mines, the fact that these mines in a sense have got a very rich iron ore, it will be difficult to replicate a Nalco. Second, the efficiencies in Nalco are kicking in. A lot of inefficiency was there, that's kicking in. Third, you don't know which way China would move. And if there is anything in terms of demand coming back at a global level now that inflation has peaked out, then pockets like, then metals in a sense always becomes a go-to sector. So if you frankly ask me whether it is, short term or medium term or long term, in terms of the scorecard for Nalco is one of those most brilliant cost efficient companies you have anywhere in the world. The second question, it's on Tata Power. It's from Mr. Malik from Delhi. And the query is 15,000 shares of Tata Power at 203. I have a long-term horizon. What should I do? Bhasin sahab.
Well, congratulations to the viewer. Excellent pick. And he's, sat through this volatility. Tata Power has just been an outperformer in the last 1 month. And I think there is miles to go. The management itself has sounded very, very optimistic that cash flows could double in the next 2 years. Plus EV charging, renewable power, solar energy, they are in every gambit. And the regular utility business, which is doing extremely well. So 375 is a target which I could see. He should take some money off at 350, but if he has a longer term horizon, I think he's in the best private sector power play and should remain there.
Praveer Sinha has already gone on record and said that by 2027, their profit, their EBITDA, and their bottom line would double from 2023. Tata Power has decided not to expand their thermal business, but they're looking at energy transition. And what energy transition could do? Can they become big in EVs? Can they start putting charging stations, which they're already planning to do? So there are a lot of terminal value businesses which Tata Power in a sense would generate. There was a time when Tata Power used to get a stepmotherly treatment largely because of the global businesses, largely because of the Mundra power plant. But that's all legacy now. Power as a sector is here to stay. Power demand is growing at a rate which means that in coming days the demand for capacity would kick in. And the terminal value for Tata Power would increase largely because it's a Tata Group company. But B, they are really reinventing themselves for being a foremost player in energy transmission distribution. You know, Bhasin Saab, there is so much happening in the power sector that you don't know whether the big gains are going to be made in energy distribution, energy transmission, EV, or pure way in which how energy generation would be done.
Correct. Generation, transmission, distribution, EV, all are playing out excellently. That is why you've seen the monopoly share go to NTPC, REC, PFC, not to forget the power lenders. But I think Tata Power is in a very sweet spot, and I would definitely be very bullish on it. It is also one pedigree stock where even though valuations have been stretched, it's from the house of Tatas, and they have already always delivered way ahead of what they promised. So I think it is a very good investment to stay put in, and power may be at the best place right now, and we could see even more better times in the next 2-3 years once we have more clarity on the government and so on.
What is your price target for Tata Power? For somebody says that, look, I have a time horizon which runs into years, not into months also.
Well, Nikunj, at 21,700, I think 375 would be a good target. And if you are looking at a longer term, it could stretch to 400. But being a utility, you have to realize there are a lot of ifs and buts. We know what happened on the unbundling of their Mundra side and so on. And cost controls do play a part over there. So I still think there is a 25% upside in this stock. And I would say stay put.
Another query, last one for the show. Viral Shah been holding 3,500 shares of IDFC First Bank since 2002. Great buying price, 46.5. I want to hold this for another 5 years more. Looking at the current market and valuations, can IDFC be the outlier? Bhasin Saab.
Well, congratulations. Even I have the same stock at a slightly lower price in my personal portfolio as a disclosure. And I don't intend to sell it, even like you, for the next 5 years. I think Vaidyanathan has made an extremely good brand as a bank. And now after the merger, it could, see little more pressure on margins as it merges with IDFC, for which they have got the go-ahead. But in my opinion, this is a doubler in the next 2-3 years, or maybe a business as a bank which you just want to stay invested in. And the price and performance will be a part of the, how the asset quality and other quality of deposit play out. But it's a very good franchise to own.
But what about their exposure to unsecured loan? And some would argue back and say, Bhasin Saab, that look, that's a worry. I mean, they're trying to build a business which is somewhere Reserve Bank of India has raised a flag.
Yes, see, Nikunj, I think there was a part of it which was there, part of their overall book when it merged with IDFC, when it merged Capital First with IDFC, which was a lending institution, high cost of deposit. But over a period of time, they've got, they've relinquished that, and at the cost of lower deposit, which has seen their margins. So I think another couple of quarters, and this ambiguity on uncollateralized, which the RBI said, I think it will get sorted out. Hence, both IDFC First and Paytm deserve to be bought at these levels.
All right, Bhasin Saab, thank you for joining us. Thank you for answering the queries. That's it on this edition of Tracking Technicals. Thank you for tuning in. Last 1 hour of trading left. Stay tuned to ET Now.